Here we are. Good morning. How are you guys this morning, this fine Thursday morning? Almost the weekend. Whoo! Let me get you my monitor. There we go. So the NQ and the whole stock market had a huge sell-off yesterday. Larger, I think, than anyone anticipated. Just a moment, I'm just setting up the rest of my charts, and we'll let the opening range die down a little bit before we get too excited here. I can see a bunch of yellow bars, which is why I'm not overly concerned about missing a move. We can tell that the market's kind of going sideways this morning. All right. Okay, for those of you who are new to the room, Mo says we've got a bad audio connection. Is anybody else experiencing audio problems? Mo says I'm breaking up a little bit. Oh, Mo, I think it might be on your end. I'm getting everybody else telling me the audio is okay, so you might want to either log out and log back in, or maybe you've got a loose wire going on somewhere. For those of you who are new to the room this morning, welcome. What you're looking at is the diversified trading system and the Raptor. So just a real quick overview, the way I have it organized, I've got the Hawk Scalper here on the top left, the Falcon Swing Trader top right, Eagle Trend Trader bottom left, and the Raptor on the bottom right. I'm looking at the NASDAQ on this chart, and on my other monitor, I have got the Euro and crude oil. But we can take a look at any market which might be of interest to you. So we're seeing a little bit of a sell-off out of the open. We had a first micro-macro cross, and you know what? This has been characteristic of the NASDAQ the last few weeks. About a minute after the open, we're getting this first micro-macro cross signal, and very nice follow-through off of that. So I think I'm going to have to be a little bit more attentive to the first signal out of the open. We had a nice sell signal here on the Raptor as well. Actually, we had one just as the market opened. Right here, we had a hard edge bounce, came out of the band, gave us a sell signal. Our filter broke up a little bit on the second signal, which would have been unfortunate, but the first one we were still good to go. Oh, look at this. Now we're getting a big reversal higher. This shouldn't have looked like too much of an opening gap to traders this morning. We pretty much took over from where we left off. You see the overnight didn't really go anywhere. A lot of up and down action. We're testing the top end of this trading range now. We're coming in with a trend change signal of all things. It's a little bit late, and it's a little bit risky because we haven't really seen a test of the extreme yet, but it is a trend change signal all the same. Now you could handle this a couple of ways. This is on our Falcon Swing Trader. If the signal prints, it would have printed right here. Let's roll this over. If the signal printed, it would have printed right here. Alternatively, you could have given up about 3 ticks and entered above the high to try to protect yourself a little bit. Oh, here we come with that buy signal again. And the nice thing about this particular trade is the way that we can bracket it, we can actually cover the position below the lows here. I'm going to disengage my stop just for a moment and hold it where it is. No, that's not what I wanted. And now we're putting the pressure on the sellers. So here the buyers showed up, showed us that they're serious about buying the market up, and now we're going to see whether or not the sellers will give way. And there they go. Oh, they're still fighting it back. We're not out of the woods just yet. There we go. Well, that was a dandy little hit and run style trade. Once again, look at how often the market stalls or even reverses after hitting our high probability profit target. Okay, it looks like at the moment we are going to be buyers today. Oops, spoke too soon. Well, here they can't seem to make up their mind yet. Look at this. Look at these spikes up and now straight down. Wowie, that's crazy. Craziness. Now they're trying to press it to the downside. We got a first micro macro cross here I'm a little bit late on. This is a signal. Once again, we've come down so steep, so fast. This is the type of signal where you should always be thinking that the market may try to retrace back here to the macro line. This could actually develop into a macro pullback. So a couple of things you could do. You could run a deeper stop. You could reduce your risk and be a little bit more aggressive on it. Either way, I think we would have been all right, because I think the market, I can see my indicator down there. I think the market continued lower. Yep, there we go. A little bit of a hesitation. And now we're right back down here to these lows. But when we see these first micro macro cross signals develop without any sort of test of the extreme, makes me very nervous. Okay, so you can forget what I said about being buyers today. Full on reversal now. So just looking here, doing my little hindsight trading. My goodness, what an exceptional day on the Hawk. First micro macro cross here. First micro macro cross or macro pullback here. And when this one was developing, it would be the same sort of scenario. I would not take this trade and cover it like that. You're just asking for it because there's no test of the extreme. My eye naturally goes back to the macro line, and a lot of times I'll be looking at where the line is actually turning, and I'll use that as a good spot to cover the trade. Because I'm always thinking the price might retrace to the macro, sometimes even a little bit deeper. Of course, there's no danger in keeping your stop a little extra deep. The danger is always making it too tight. So we had that trade, and this trade here, even with moderate size of 2 or 3 contracts, we have about $450 to $600 in potential profit just a few minutes out of the gate. I don't know about you, but if I bagged $500 in a half an hour, I'd probably be going back to bed. All right, now we're working on a macro pullback signal. Wow, and we're fighting the primary support area on our support and resistance suite. See here? Here's our primary support. Oh, possibly a late filter entry signal here. My goodness, we've got a lot of things going on in a hurry. Oh, and that macro pullback, again, very nice follow through on that. It's just about to go place that order when the market took off on me. I was waiting for a little bit of a pullback, which we got right here, and then they came right back with another signal. And we just hit that profit target. It does look like they're digging in, though. Stop this big slide here. See if that turns into a 4-arrow consolidation. Here they come again. Okay, here's our 4-arrow consolidation signal. This is on the Hawk. We've got comparable signals on the other tools. I'm going to go take a look at the, okay, they're pulling away. Let's go take a look at the Falcon and the Eagle. So here's the Falcon. We have a late filter entry signal. This should have some follow through to it. But, you know, as before, whenever you see a market in free fall like this, we normally, when the market unwinds like this, we normally get this kind of scenario where we break the swing low, there's a little bit of a reaction, and then the market tails off. But when it goes straight down like this, almost in free fall, takes out the support there, this hardly seems like the test of the extreme down here. Well, here we come again with another signal, another late filter entry signal. We have the opportunity to take this one, oops, got a little bit slow there, take this one below these lows, which would force the sellers, force the buyers out of their position. It's one of the hazards of doing a trade room. When you're explaining stuff, you don't always have a chance to get into the trade in time. Oh well. So now they're coming back. See, they've broken this support area. Sellers knocked them down. The buyers are coming back. We need to see some sellers come back here now. If we have the sellers show up again, maybe off of a trend line touch, that could be a pretty solid signal also. Now I thought I heard trend, and we did. Again, a little bit late, same kind of look, right? We're seeing all this breaking of support and no real reaction to it. So there's always a possibility that we're going to get that retracement back into the hard edge. All right. Oh, baby, come back here for a second. Ah, nuts. This was that trend line touch I was waiting for. So if we didn't get it from here, which hopefully you did, hopefully you saw that, hit that profit objective. I was waiting for this trend line touch. We're just a little bit short of that trend line touch, but still it would have been one that would have been worth taking. Come on, get on down there. Well, this is a four-figure day today. There you go. My goodness, they're just giving us signals with both hands. Can't get the orders in fast enough. It's always nice trading days like today. All right, so plenty of opportunities in the NASDAQ this morning. Here on the Eagle, we had the trend change signal, which came very late. Normally, we would anticipate a trend change signal somewhere around here. I suppose in hindsight, you could make the case that this was the test of the extreme. Right? There's the extreme price. Here's the test. Here's the failure. And let's see if we would be at our profit objective yet. Oh, look at that. They just kissed it. Now they're starting a reversal. No doubt a little bit of profit taking going on. And the Raptor. So after our initial signal after the open, which was right back here, had a trend change signal to the upside. And I think that we got our 20 ticks out of that. We need 5 points. So Did it get up to 37, 38? Yes, it did. Hit our profit target here, almost on the number, and reversed. And then we come back with a trend, come back with a trend change signal to the downside, which, like the eagle, was a little bit late. It occurred right here. I'm going to dial up my stop a touch because it looks like a 3-period ATR is following the market very well trend-wise today. All right, well, while we're waiting for the NQ to give us something, let's take a look at what's going on in the euro. The euro, of course, is a market that it's great for, well, it is a good North American market also, but if you're having trouble sleeping, it's primarily a European market, as you might expect. Here's the hawk. A little bit after the London Open, we had a nice little first micro-macro cross signal build right here. Good follow through on that. Here was a red bar buy, which gave us some follow through. Came right back with a green bar sell. And then another first micro-macro cross. So even here on the euro, the signals were spaced a little bit more evenly, but it looks like we did get some half-decent follow-through on those. Here's the first micro-macro cross to the downside that didn't trigger. So if that happens, you should usually be a little bit more alert for a buying opportunity. Now, you see how we're now on the hawk? We have so many yellow bars. Look at our trend lines. They're all over the place. Our macro trend line keeps changing color. Our filter, all over the place. This is not a market that we want to be trading. And it's doing that because, well, we're stuck in this trading range. So a lot of times, what I'll do if I'm inside a range like this, unless I generate a signal near the top of the range, like this one does, I'll actually just wait for the market to break out of the range, give me a retest, and then look for this opportunity here to buy. So let's see how this one played out. So there's our breakout. Here's our retest, and we come back with, doggone it, Eric, I keep hitting the wrong part. We got a deeper retest, and quite honestly, I would not have taken this signal because of the yellow bar, but the principle remains the same. See how the market broke up, came down, retested, and now they tried to head higher. Here's the Falcon on the euro. And we had a trend change signal right here. Came again a little bit late. And here too you can see your trend line is like a roller coaster. Your filter, it looks like a checkerboard. It's getting so broken up. So it's the same thing. Ideally, I would identify this as choppiness, as a trading range, and I would like to see the market get outside of that or give me a signal very close to the breakout as it did here. So the euro, a little bit of tough slogging right now. I might throw soybeans back up there. And here's the eagle on the euro. It would have been very difficult to take, given that we had all these breaks against the hard edge. But you see we're getting these red bar buy signals. Red bars and a buy signal bouncing off of the hard edge. Those tend to be fairly reliable. But quite honestly, this one is much easier to spot in hindsight than it would have been real time. You see this little segment through here. That's the same mess that we were looking at when we were looking at the hawk and the falcon. Okay, we'll throw soybeans up there for a moment and see if they're going to be any better to us. Okay, now we're into the hard edge here on the eagle and on the raptor. Normally we anticipate some sort of reaction here. Working on a possible green bar sell. We did get some opportunities to buy here on the hawk scalper. This failed green bar sell and first micro macro cross. Here we come with the macro pullback. And a late filter entry here on the falcon. All right, this is getting kind of interesting now. Oh, every time I want to explain something, the market's got to take off on me. What's with that? Okay. Here we're getting a trend change signal. Prices have more or less made a little bit of a trading range. You could identify it as a range like this. But notice we get a late filter entry signal. Now the late filter entry occurs when the filter goes out of sync, but the trend line does not. This tends to be a very reliable signal on the falcon. You'll notice we had late filter entry signal right here. Filter goes all out of sync, the trend line does not. In fact, we had a couple late filter entry signals here. Now, when the market does this late filter entry signal, I don't like to see it stall quite as much as it does here. Normally, it follows through a little bit faster. But this is the kind of signal, it's like the first micro macro cross on the hawk scalper. I'll almost take this signal without exception, and especially if it's building the signal near the top end of the trading range. Well, why would I do that, you say? Because most people are afraid to buy at the top of a trading range, right? They'll identify a range like this, or maybe even putting the high there, putting that at the top end of the trading range. Why would I consider buying at this point? Why would I buy here? Well, a couple of things are going on here. Chances are very good, now they're not 100%, but chances are very good if I get filled here at 41.10.50, chances are very good I will get filled at 41.13. But by delaying my entry, I'm giving up almost half of my profit objective, or sorry, a quarter of my profit objective. I've got a 20 tick target and I'm giving up 1, 2, 3, 4, about 5, 6 ticks to get entry. Right? So logistically, that makes no sense. There is the possibility that I could get filled and have the market reverse on me off of this resistance area. That's a very real possibility. But I know that the late filter entry is a very reliable signal. So even if I was concerned about that, rather than pass on the signal entirely, I would probably dial down the risk amount so that I could at least participate in the trade. But right now, the way this signal is setting up, there's no point in waiting for a breach of the highs, because you will have given up far too much open profit just to get entry, right? And our high probability profit targets are always based on a hash mark entry. That doesn't mean you need to enter on a hash mark. It just means that this is the high probability profit target right there. So if I delay my entry, say like this, I'm making the market work that much harder to get to my profit objective when the high probability target is actually right here. So let's see how that worked out. Okay, hit our high probability target and we start to turn. If I had delayed the entry, oh, I got lucky. The market did drift high enough to give me the second entry, but sometimes it won't. Sometimes it will hit our high probability target and reverse. So there's times that you want to postpone your entry a little bit, and there's times that you need to say, you know, I need to trust the signal a little bit. I'll dial down the risk if I'm not sure. But if the entry is so far away that you're giving up a substantial portion of your profit, there's no point in doing it. There's no point in waiting that long. Okay, here they come. Big push to the upside now. Okay, we're getting a signal here on the Raptor. Now, this is kind of interesting because, well, our band has changed over. Everything is kind of interesting this morning, isn't it? Our band has changed over. It's not clear yet whether this is just going to be a larger retracement before the downtrend resumes, or if this is actually a buying opportunity. Now, it is a trend change signal, and they ran away on me again while I was trying to explain this. But because the market was having difficulty heading lower, right, we did a double pullback into the hard edge, actually broke the hard edge a little bit. We should have seen the market recover something like this and continue lower. But because the market seems to be struggling heading lower, I would not object to taking a buy signal on this trend change, which is exactly what we got. And let's see, are we, oh, still fighting it a little bit. We didn't get our profit target just yet. Let's see if I can grab it with a limit order. Oh, well, there we go. So I took a little bit of a slip there. I didn't want that. And my profit target should be a little bit higher. Oh, I didn't get a limit order. I got a short order. What the heck? Did I enter the wrong order? Buy limit. Oh, I probably did a sell stop. That's not right. Okay, buy limit. There we go. There we go. Got to pay attention to what buttons I'm clicking. Nope, they're not going to give me the buy. Okay, but I think we are going to see them press up here a little bit. Probably get maybe 41.30. Okay, well, they've settled somewhat. Aha. Did you guys notice another late filter entry signal here? And there they go. Wow. They will not commit this morning. Okay. First micro macro cross here, you can see we're right back in this whole same zone that we were looking at earlier, the lows, right? So we haven't really gravitated too far from where we started today. Working on a trend change signal or a possible trend change signal here on the Falcon. All right, here comes the Falcon. We've got the warning dot. Oh, there's the triangle and the hash mark. Oh, you stinkers. I was going to anticipate the entry, but all right, we get maybe a chance at a second push here. Getting in really late. Wow. Just as well they blew past me. Okay, possible trend change to the upside now. This is starting to resemble a roller coaster. You don't have too many yellow bars cropping up just yet. This macro pullback, this is a nice thing about trading the hawk, is you can take advantage of these smaller moves because the way the hawk is designed, it prints these signals much sooner, right, for these little scalp type opportunities. Green bar sell. Here's the green bar sell and the red bar buy. Those are our counter trend signals. You could set up to buy the failure of this, or you could use it as an early warning that the trend might be reversing, in which case you're very likely to get a first micro macro cross signal going the other way. Okay, everything's a bit of a mess right now. Okay, we got a rule of 3 here on the eagle. I'm going to anticipate the entry here below the lows, and this is a very quick rule of 3. The rule of 3 occurs when you get 3 breaks against the band. So we've got a bullish band, and we've gotten 3 breaks against the hard edge of the band. We actually slipped a tick there, which was a touch annoying. See, now this looks like a test of the extreme. Come on, Eagle. Okay, well, we're going to have to give them a minute there to sort themselves out. Whenever there's a change in trend, most times, today is the exception, but most times the markets don't turn on a dime like we've been seeing this morning. Most times they need to sort themselves out a little bit. All right, so here come the sellers again. Well, that's not good. That's a red bar buy signal. All right. Last chance for the sellers now to knock this market down. So they're back here to where they were, which is why I'm keeping my stop above there. No, they're going to tap me here in a second. Sometimes it helps if you hold your breath. Think happy thoughts. Happy thoughts. Come on. Where are the sellers? Where did the sellers go? Oh, you stinkers. Oh. Okay. Well, the sellers will probably show up now. Certainly as we get closer to these highs, the sellers are going to become a little bit more active. But as soon as I saw this build into a red bar buy signal, I was a little hesitant. Just because the red bar buy off the hard edge bounce, it's a pretty reliable signal. I wonder, when I first set it up, and it didn't help that we got slipped on the trade either. Oh, maybe I should have done it like that. Because this high here is a lot more influential than this little swing high here. If we get taken out above this high, then I really know I'm wrong. This high here, that could have just been bad timing. Oh well, we'll get it back. Wow. Okay, now we're getting a lot more yellow bars. Now we're getting a lot more confusion. This is a macro pullback signal on the hawk, and that does tend to be reliable. And we do have a second push on this entry now. Oh, for crying out loud. I cannot catch a break today. All right. I don't know if you guys noticed what happened there. My stop strategy, and I was just about to explain this as well when the market did this to me. Where was the entry? Was it right about, well, we'll say it was right about here. Notice where my dots are. These blue dots are my stop strategy, but I'm looking to buy. So the stop strategy is actually on the wrong side of my trade. So what I was trying to do, just as I got stopped out, is I was disengaging the stop temporarily until the market traded up a little bit, and that would flip my stop strategy to the other side. Unfortunately for me, the market, I was a touch slow. I'm slow today. The market waffled, and the trade manager, because it's a computer program, the market got above here. All of a sudden, trade manager engaged my stop, so it brought my stop from down here to up here, and it stopped me out. Now, it's not all bad. I did get stopped out. Oh, it took me out of break even. I thought I was able to capture a little bit of profit on that, but obviously not. So moral of the story is, if your stop strategy is against your position, what you want to do is you probably want to disengage it for a moment or change your stop strategy entirely. You know, go with something maybe like parabolics, which will be on the other side. So that was unfortunate. Seems like it's just one of those days today. Let's go back here to the Eagle trade. Yeah, You see this? I think we spoke about this the other day, how I was telling you, if you want the most reliable stop strategy, the one that's going to give you the ultimate staying power, it's this one here, swing high-low. Because it only takes into consideration the major swing points. Its default is set at 5, which means you need at least 5 bars going into a swing. So a little itty-bitty swing like the one I was covering above, nope, not good enough. It looks at the real tough ones. And in this case, it would have had my stop up here, and then it would have rolled my stop to here. It would have given me the staying power I needed to ride out this swing, because now it looks like the market's tanking, and that rule of 3 trade, whereas I ended up taking a loss because my stop was too tight, has the potential to turn into a profitable position. We will have another opportunity. I'm happy to say we have the buyers tipping their hand to us. There we go. So here comes another red bar buy. Now, if they fail here and send the market lower, then that should be a good sell opportunity. And we've got an early signal here via the macro pullback on the hawk. Remember, the hawk does everything faster. And notice my stop strategy is against me again, so I'm just going to disengage that for the moment. We're into yellow bars now, so we don't want to trade yellow bars on the hawk. So now we're still waiting for them to get their act together. All right, so let's see. The sellers are stepping up a little bit earlier. They're defending this resistance. And we're getting a red bar buy here on our hawk. And the red bar buy is a signal that we could take with trend, or we can set up to sell the failure of it. And right now, given that we're making or have been making lower swing highs, I was thinking that the sell might be the better trade, but nope. No, they did push up. They did push up enough to find our profit target on the red bar buy. Now these tend to be fairly weak signals. Excuse me, I don't get too excited about red bar buys and green bar sells. Very often I just use those as early warnings. Wow. Never thought we'd get that kind of reaction off the red bar buy. Nice trend change signal here in the Falcon, but even here, you know, everything was just starting to look so broken up. Our filter is all broken up. Our trend line is all over the place. We'll put that away for the moment. I'm just not playing nice today. been kind of range bound for about the last half hour or so. It's 10:30 in the east, and this is a lot of times where we'll see a reversal against the trend if there has been a trend, but today I'm not so sure. Yeah, Peter says today was a tough day. You got that right. Good moves, but no real commitment. Or very short-term commitment. All right. Another possible trend change signal here on the Falcon. It's messy. Trend line, no real direction to it. Might be a good time to dial down the risk amount. First micro macro cross now in our hawk. You could take it here, you could take it below the lows. So right now I got to take it below the lows. And there they go again. Oh, yeah. Oh, it is one of those days. Oh, man. Oh, Eric. Okay, well, the trade worked out. I'm just a fraction of a second too slow on my submit button. Too much fun. Just too much fun. Crude oil also giving monster moves today. Look at this, it's down to 44 a barrel. Well, the Saudis did say it could hit 40 without too much resistance. Nice first micro-macro cross here. Macro pullback signal here that had pretty good follow through. This was a first micro-macro cross that would have given you a little bit of heat, but let's see how it was printing when it developed. Notice all the yellow bars. Notice the choppiness. Notice the filter. This should, give you pause. So when you see a signal like this develop, now I know I was just talking to you about offering up too much on the entry to get to your profit target. That's true when the market doesn't really, or that's more true when the market seems to have some sort of direction, or if you've had a testing of the extreme or something to make you think that the market will actually challenge the resistance and break on through. This one, because of all the yellow bars, because of all the choppiness, because of all the reversals, look, it reversed off the lows 3 times here, reversed off of the highs a couple times also. Now we find ourselves here with the first micro-macro cross signal. That's the kind of scenario where I would probably try to take it above the highs. I would risk it as deep as I could. And fortunately, that would have kept us out of a potentially bad trade. Crude oil in free fall right now. You know, there's a lot to be said for being choosy as well. Like, don't feel like you have to take every single signal. Here's just one trade, in crude. Oh, let's do it like this. Okay, so you could play it for 2 contracts, and let's say that we're going to split it so it's 50-50. So there you would have banked 100. Here's a little bit of a reaction to this area here. And let's see how far our stops keep us in. Well, our stops would still be active, so that's about 40 ticks, $400 that you would have on your remaining contract. So even if you get stopped right here where the stops are at, that's a $600 trade. And that's just taking one trade. That's not chasing the market around like we've been doing with the NQ this morning, trying to get a handle on it. Another Peter asks, just a quick question. What is the largest tick number you use for a long-term chart, i.e. 20 ticks on the eagle? Seems to get rid of a lot of noise, especially in this market. Fewer trades for sure. Great question, Peter. Normally, I stick with the default settings. However, there's absolutely nothing wrong with running a companion chart and putting a higher tick value on it. You are correct that doing so will filter out a lot of the poor signals. And sometimes people like to have it there to confirm what they're seeing on the other charts. Usually the criteria I use for setting the tick size is where the daybreak lines fall. Normally I want to see the daybreak line at least span the width of the chart. So you can see right here, a 20 tick setting is actually pretty good. Problems occur when your daybreak lines start to look like this. Then you're not generating enough signals. Your brick size is too large. But you have a good point, Peter. As volatile as the market has been today, there wouldn't be too much wrong with going with a 20 tick setting. Let's see what it did yesterday. So here's our daybreak. Oh yeah, you know what, Pete? 20 ticks are looking not too bad. This was Monday? Yeah, Monday session. This would be a little bit tight. This was last Friday's. This too would be perhaps a little bit tight. But Thursday's session, no, that looks fine. Sometimes you've seen me do the reverse on the NQ, where normally I'm running a 12 tick. If the sessions start to show up like this, you know, where these are all days, I'll dial down the NQ from 12 to 10. So you can adjust it. But like I said, what your objective is to ideally, your daybreak line is going to at least span the width of your monitor, of your chart. And like I said, as crazy as the market has been today, that might not be a bad idea, because we are certainly generating an awful lot of signals. And you can always run, like I say, a companion chart next to it also. Oops. I noticed my day ranger did not have enough data. So just a huge average range for the NQ of late, hovering around 250 ticks a day, which is substantial. Oh, got our trend line touch or trend change signal here on the Falcon, and we have an opportunity for a late filter entry on this one. But now it's run the other way, so put that on the back burner. And now we have a 4-arrow consolidation here in the hawk. And this one's going to run away on me in a second too. I should probably dial down the risk amount on this one. So the 4-arrow consolidation is we have 1, 2, 3, 4 signals. It usually identifies a period where the market is searching for direction. A lot of times the 4-arrow consolidations will look like bear flags, or if we were in an uptrend, they would be a bull flag. And we get the 4 signals printing like this, and the market will tend to move off of the 4th signal. Didn't do so in this case, which is okay. Scrub that. But that's what you look for. Sometimes, as what we're seeing right now, they end up going sideways. Now the 4-arrow consolidation is a pretty reliable signal. In fact, it's the only hawk signal I will take off of a yellow bar. We're having this morning's lows to contend with. The market put the brakes on at 4,100, and that's where we're back to again. Well, crude oil treading water a bit. Oh, and a trend change signal. Now, again, this is one of these situations where we do have a chance for a second push on this entry, and we can cover it right below the low. But we've got a market that's, in a pretty obvious downtrend. So anytime we're trying to go against the trend, don't expect a full-blown reversal. This may be nothing more than a profit-taking retracement, and we got slipped on the entry again, which I'm not all that happy about. I may hold my stop here just for a little bit, see if we can't ride out this swing. Okay, you see how this candle is fighting, how we're getting a tail on this end? If it continues higher from here, this might be a good one to roll your stop underneath. Because what it's showing me is that this is a real tug of war going on here. The sellers are trying to knock price is down. Buyers are trying to fight it back. And there's probably some sort of trend line association with this one. I can't quite place it just yet. Oh, sorry, I need to disengage that. I wanted to hold my stop. Okay, so same principle, except instead of just using the one bar, now we're looking for the buyers to step up and show us that, yeah, we're serious about buying. And since we are in the same boat as the buyers, this would be a good spot to roll our stop if in fact the buyers are able to hold on to this bar. No. Not yet anyway. Come on. I find it hard to believe that this is the best the buyers can do, is just that single bar. Give it a little push with your mouse, make it go higher. There we go. See, if we all do it, it'll work. Okay, possible late filter entry. And yes, I know the bar or the trend line went out of sync for one bar here. One bar will not be enough for me to totally ignore the possibility of a late filter entry. Ideally, it should have stayed green, but it probably got one tick too low, and that was enough for it to flip the bar color over. If this bar finishes green, then I'm going to activate my stop, and I'm going to roll my stops underneath here. There we go. And now I'll let the trade manager deal with it. So here we are. The buyers have shown that they're serious about buying. They're going to put the pinch on the sellers. And if we can get somebody to tick 41.11.5, I think we're going to start to see the sellers jump ship. There we go, 41.11.5. Let's go. Come on. Come on. Oh dear, we got to push it again. Get up there. Get up there, come on. Huh. Okay, that surprises me that the sellers are digging in that hard. So same scenario. I'm going to hold my stop below here. This is where the buyers made their stand. Or I can use the swing high-low, which would confirm my stop placement. I'll keep the parabolics handy as my standby. Yeah, Pete's right. Where's Ray when I need him? I need to push. Push! Ray could always do that so good. Come on, get up there. There we go. There we go. Have we flushed the sellers out? Come on. I saw 41.11. There we go. 41.11. Let's see half. Come on. There we go. There we go. All right. That's more like it. So I'll switch to parabolics now. And remember, we got a little bit of a late entry here. Hopefully they won't leave us hanging by that amount. Whew, this is hard work today. There we go. There's 13, 13.5. There we go. Oh, whew. Boy, they really made us work for that one. Okay. All right. Well, there you go. That's how it works. Sometimes, on a day like today, the biggest challenge is waiting for the best quality signal. Considerable amount of choppiness, I have to say. Oh, we did have a corresponding first micro-macro cross signal. And that would have been a fairly easy one to take. Why? Well, not only is it a first micro-macro cross signal, but we did have a test of the extreme here, didn't we? To the downside. So we did see a failure to the downside. The markets start to move higher. We'll print our first micro-macro cross right here. So this is a signal that you should have a great deal of confidence taking. Again, I probably wouldn't risk it to the stop strategy here. You could either risk it right below the low, or at the very least, you want to take your macro line into consideration. Honestly, I probably would have taken the low. Boom, in and out. All right, let's put that away. Just watching the other markets, but there's not much going on there either. Okay, well, while we're waiting, here's a little piece of trivia for you, and Phil might be able to confirm or deny this. But have you ever wondered why Australians call everybody mate? Good day, mate. And it's not just because they're friendly, which they are, but apparently it's because, as you no doubt know, Australia began as a penal colony. So they used to address everybody as inmate. Good morning, inmate. And over the years, it got shortened to mate, which the Aussies actually pronounce might. Yeah. Phil's giving me a little heat here. But I thought that was a little interesting piece of trivia. You know, Phil, um, if anybody gives you a hard time about Australians being descendants of uh, criminals and prisoners and such, tell them that the ones that could swim jumped off the boat as it was passing North America. All right. Well, we're trying here yet again on a this was technically the first micro-macro cross signal here on the Hawk, possibly a macro pullback signal. But notice how we're starting to lose our momentum. You can probably see it better on the Falcon or even the Eagle. It can be a useful exercise to, normally we draw trend lines across the top of the market. Sometimes it's a useful exercise to connect the bottom, and you can get a very quick visual of when it seems like the market is changing direction. If you connect your lower swings, oh, I guess this one was technically over here. But notice how the moves lower, well, we had a substantial move lower there, but how they're getting shorter. I compared this leg lower. I better clean this up a bit. This is getting a little messy. Compared this leg lower with this leg lower. Notice the lack or less momentum behind it. Oops, sorry. Doesn't mean it can't head lower from here. It just looks as though the market's not quite as committed to the downside at the moment. Actually, most of the day has been more or less sideways in spite of the huge ranges we've seen. Phil says that in Australia right now it's quite fashionable to be a descendant of a convict. Well, that's interesting. All right. Folks, you gotta excuse me for a moment. I've got a friend coming to the door. I will be right back. Hi, sorry about that. I had a friend who stopping by, dropping off some stuff, picking up some stuff, and unfortunately this was the only time he could make it. Phil asks a good question. Eric, from your experience, which is the best order type to use? I keep getting slipped on a stop limit order. Well, Phil, I pretty much just default to a stop order. It's rare to get slipped. Today has kind of been the exception. And I don't know if the market's a little bit thinner. Here's a first micro macro cross. Let's see if we get slipped on this one. If they head lower. No, we'll chase them for a little bit. We'll get the first micro macro cross up here now. Phil's using a stop limit. Here I should demonstrate what that is for those of you who don't know what a stop limit order is. A stop limit is a combination of a stop order, so the order is not triggered until your price is hit, but it's also a limit order and it limits your slippage here. So by default, the stop limit is set at 1 tick. And we're getting a green bar sell. Let's see if we can do a stop limit on that. It's going to be difficult for you to see, but you can see my entry is 41.15 quarter with a stop limit of 41.15. Or sorry, the other way around. So that's saying that that's the most slippage that I'm going to accept. I'm only going to get 1 tick slippage. Now, if the market is gapping or slipping a lot, it can actually gap your order entirely and you won't get filled. And I think that's what Phil is experiencing. There's pros and cons to that. A lot of times when the market is slipping, that's not a good sign. There's something going on there and you may not want to be involved in it anyhow. The annoying part is when you do get slipped for a tick and the trade does work out. So you're left on the sidelines for the sake of a tick. And you don't realize your profit. All right, let's try it here to the upside. I'm just looking to get an order. Okay, so now we're working on our first micro macro cross to the upside. We'll see how this works out with that stop limit. Oh, now we're into yellow bars. Very uncooperative. Okay, yellow bars are not a signal I take. I'm only doing this for demonstration purposes. So the order is 41.17 quarter with a limit at 41.17.50. But to answer your question, Phil, 99 times out of 100, I just use a basic stop order. And if I get slipped a tick or two, well, it's part of the biz. But very often we don't get slipped. Today really has been the exception. All right, so there we got filled on our order. Oh no, actually we got filled. We did take a 1 tick slip here, but we did get filled 41.17 half. The order was 41.17 quarter, but we didn't get gapped this time. So this wasn't really a signal because of the yellow bars. And you can just see the extreme choppiness. You can just see how the market is starting to set up here. We're getting all these swings. You can almost envision the trading range setting up. And, well, it's 8:30, so 11:30 in the East. It is about that time of day where the market does get a little bit directionless. Okay, you guys, if you are trading this afternoon, well, the trend, no question, the trend is down, but also no question that we are stuck in a very large sideways range. Almost, well, you could almost take the open. Oops, wrong tool. You could almost consider today's high and low the trading range, and we are stuck in here right now. So it's going to be tough trading so long as we're within this range. As we get toward the top end of the range or the bottom end of the range, we may get a tradable signal. But right now it looks like they're just happy where they are. So I don't really have a bias for you short of, to the downside, obviously. I think it's definitely a bear market. But this support at 4,100 is substantial, and it looks like the highs at around, what is that, around 4,130 are holding the market. So we've got this big 30-tick range to deal with. We didn't take a lot of time looking at crude oil or soybeans today. Crude oil still in a downtrend. Might see a little bit of a retracement in crude. It might get back up. They're hovering around 40, just under $44. If they get up toward 44.20, we may have another good selling opportunity from there. In the meantime, definitely I think you're going to have better selling opportunities in crude than buying. And soybeans, which we totally neglected today, well,